Good morning and welcome to this week's PFL podcast. I'm Curtis Chandler and we've got a lot to report on this morning. Crude gave ground on Friday of last week but finished the week sharply higher. Cushing has slipped below tank bottoms. Rail volumes are up across the board and Canadian National has cut a deal that may clear the path to the biggest rail merger in a generation. The Dow closed out the week at 51,947.25 points, which was down 198.68 points week over week. In overnight trading, Dow futures are trading higher and are expected to open up 550 points from Friday's close. WTI closed at $89.31 per barrel on Friday of last week, down $2.88 per barrel on the day, but up $6.82 per barrel week over week. WTI is poised to open down $7.12 per barrel from Friday's close. Commercial crude stocks built 2 million barrels week over week and are sitting at 411.7 million barrels, but is still down 6% below the 5-year average for this time of year. The number that matters more is Cushing, which fell to 19.4 million barrels, below the 20 million barrels operators treat as minimum working inventories. When we get below working oil in storage, sometimes referred to as tank bottoms, the hub stops behaving like a storage buffer instead of bottleneck. Bottom line, you can't get the same amount of oil out of storage on a consistent basis as you get closer to empty. In natural gas, this would be referred to as cushion gas. Propane was the outlier product side, building 6.3 million barrels, now sitting above 34% above the 5-year average for this time of year. Total commercial petroleum inventories rose 11.6 million barrels week over week. North America rig count was up 5 rigs week over week. The U.S. gave back 1 rig to finish at 587 active rigs. Canada added 6 and now sits at 204 active rigs. Year over year, we are up 67 active rigs collectively. Rail traffic was strong. Total North American rail volumes were up 4.49% year over year. 8 of 11 of AAR's major traffic categories posted gains. Motor vehicles and parts was a weak spot and was down 4.91%. We are watching a few things out there for you folks. Starting with this Strategic Petroleum Reserve, the SPR has fallen 311.4 million barrels from 415.4 million at the start of the Iran conflict, the lowest level since 1983. Washington maintains that these are exchanges rather than sales and that the barrels will come back with a premium. Over to the Bakken, North Dakota crude sold at $2.56 premium to WTI in May, and the state's authority had to go back to 1986 to find similar numbers. A basin producing less oil and still commanding a premium is telling you barrels are being pulled to market rather than pushed here. See PFL's rail report for further details. We are watching Trans Mountain. The binding open season should leave 80 to 90% of the 890,000 barrel per day system under contract. The second open season, this one for expansion capacity, closes August 10th. Up in Ottawa, the premiers met in Charlottetown after Washington raised levies on a range of Canadian goods by 50%. Energy and potash were carved out. See PFL's rail report for further details. We are watching fuel surcharges. Fuel surcharges are the story inside of rail earnings. UP posted record second quarter freight revenue of $6.5 million, up 12%. Strip out surcharges for fuel and the growth is really 4%. That is a pass-through, not a demand story. More on fuels and surcharges in today's report. We are watching trucking on the highway. Diesel average $5.13, up 34.7% year over year. And driver supply is tightening at the same time. JB Hunt figures new licensing rules could pull as many as 437,000 drivers out of the workforce over the next 2 or 3 years. See PFL's report for further details. Trucking woes are looking bullish for rail. We are watching frac sand. Mongolia Oil and Gas agreed to buy Wirefile Energy last week for roughly $4 billion, buried in the asset list as a sand mine, already covering about 80% of Mongolia's own consumption. A producer that owns the pit does not buy delivered sand carloads. See PFL's report for further details. Over to the Surface and Transportation Board. Canadian National agreed to drop its opposition to the UP and NS merger. In exchange, it gets access rights to Kansas City Terminal and the Memphis to Eagle Pass route. In our opinion, CN did very well here. Closing out the watch list, Class 1 headcount. We have all the facts in today's report. Bottom line, headcount is down year over year. That's it for today. As always, more information in today's report. In today's report, we have 21 charts, tables, and graphs for your viewing pleasure. If you find PFL's Rail Report useful, please pass on to a friend or coworker. Has been and always will be free, and we do it all for you, the reader. We have other free reports, including our weekly RIN report and daily market commentary that you may need to get signed up for. PFL is here for all your rail needs, including storage, leasing, subleasing, car cleaning, car repair, flaring, scrapping, nitrogen generation, and transloading services. Please call PFL today at the desk at 239-390-2885 for further details. In the meantime, we hope you have a great, safe week, and thanks for listening.